Good evening. Folks are just joining. We're just going to give it a minute and then I'm going to hand it over to our practice group leaders. Is this anyone's first time joining the venture capital group?
Yes, it is.
Oh, great. Chris, we'll give you a moment to introduce yourself. And Mathis, I saw you raise your hand as well. Just for the sake of the group, a lot of these folks have joined before, but why don't you just take a quick 30 seconds to introduce yourself. Chris, we'll go ahead and start with you while we wait for folks to join.
Okay, thanks, Hannah. My name is Chris Graham. I still haven't figured out how to add my firm name to the screen, but I am a partner at Lord. I am resident in our Providence office. And I have been practicing for many, many years, not exclusively in venture capital. It's more of a private equity M&A practice, but I certainly do a good bit of venture capital in the course of every year. So I'm pleased to join you all, and nice to meet you.
Thanks, Chris. Mathis? And I apologize if I'm saying that incorrectly.
That's perfect. That's perfect, Anna. So thanks for the idea, Chris. I will also try to add my law firm's name, next to my name. But I'm from Sorainen. We operate in the Baltics and Belarus as well. It's my first time here. I'm actually joined Sorainen just a half a year ago. I've joined Sorainen from before I worked at a startup, one of the most prominent startups in Lithuania, at least. And this is why it was, not as easy, not a hard change to jump from the startup to the law firm. And now I'm senior associate here and leading the startup sector group. So happy to join you and learn from you.
Wonderful, thank you, Mathis. And do we have anyone else who this is their first time joining?
It is mine as well. Good morning, everyone. Fernando Carvalho here. I'm from Tozini Freire in Brazil, a partner with the corporate team and also part of our private equity and venture capital practice group. So I think João Buzin, our lead partner, has participated in the past and asked me to join you this time. I'm happy to be with you.
Great, thanks, Fernando. And I think last but certainly not least, Chris Letters.
Thanks, Anna. Very, very possibly least. So yeah, Chris Letters, principal associate in the corporate team at WLG, based in our Birmingham office. So sort of a varied practice across M&A, private equity, and venture capital. My colleague Neil Hendren, who would normally attend, couldn't today, so sent his apologies. Been practicing with the firm for the last 7 years, and very happy to be here.
Wonderful. Thanks, everyone. I always like to introduce some of the new folks because I know over the last 6 months or so since we met last, we have had new folks joining our different practice and industry groups. So with that, I'm going to go ahead and hand it over to our practice group leaders, Srinath, Alan, and Jens, to kick us off. We've got a pretty packed agenda today.
I'll kick off, and I think I'll just introduce myself, Alan. I've met some of you before. To the new people, welcome. To the point just made by Hannah, we've rounded out what I think hopefully will be an interesting discussion. So probably best we jump right in. We thought best today to start, as we had done before with some geographies, that we handpicked a few geographies just to give us a bit of the state of the market. Certainly things have shifted from the last 6 months in terms of activity and volume, et cetera, but it'd be interesting to hear from few different jurisdictions. So kicking off as per the agenda, we'll throw it over to you, Chris, to talk about the USA, and everybody, if you could take 5 or so minutes, just so that we can stick to the agenda, that would be great.
Sure. Thank you, Alan. Well, as everyone I'm sure appreciates, 2021 was a tremendous year for VC investments in the US. We far exceeded even the stronger years of 18, 19, and 20. But everyone needs to appreciate that there are really 2 VC markets in the US. There's California, Silicon Valley in particular, and then everywhere else. And I'll be speaking to the everywhere else because Silicon Valley is such a dynamic place but you have to be in the middle of it to really appreciate what's going on. I will say that pretty much whatever starts in California usually moves east. So we may well be 6 months behind what's going on in Silicon Valley right now. But the average investment size in all rounds, interestingly, grew and also reflected higher average pre-money valuations, which is really, I think, emblematic of the fact that there is so much cash in the various VC funds and so many new funds and so much fundraising that's going on. The competitive market and the interest in venture investing has really made a boom time. And a lot of this, I think, is driven by the fact that, there have been some really exciting exits. There were many IPOs, there were some sales, and there's just created a significant amount of enthusiasm, I think, for venture investing in the U.S. In 2021, I thought this was really interesting little nugget that came out of the Fenwick study. But the number of up rounds of all the rounds, 94% were up rounds, 4% were down rounds, and 2% were flats. That's across all rounds, of course, but still, I think that's indicates a pretty dynamic sector. I think in terms of hot sectors, I would say software is king, and a lot of it, software's been king, and software continues to be king. I think much of that was largely because of the pandemic, and there were interesting a desire for new applications, whether it was education because all the kids were learning remotely, or whether it was business productivity because we were all remote, or whether it was e-commerce driven by the fact that there were so many opportunities and no one, everybody was basically hunkered down in much of the US anyway. That really fueled the drive for software efficiencies. FinTech is also enjoying considerable attention, but much of that, I think, is at the later stages. Obviously, there are many flavors of FinTech. I mean, it ranges from alternative lending to digital assets to payments. And my personal favorite is what's labeled RegTech, which is, I think, increasingly of interest because of sanctions being imposed as well as compliance requirements. And interesting also, I think, is that InsurTech is getting some attention. InsurTech is really a way to shake the old staid insurance industry awake and say, you can do this differently. And people are having, applying a lot of creativity to new processes in the insurance process. And life sciences continues to do well. I think, particularly in the Northeast, drug discovery is a hot area, continues to be. In particular, there's a lot of interest in CNS, central nervous system drugs, as well as immunotherapies. And obviously that's typically a much longer road, but basically a lot of the large pharma have offloaded their R&D and are doing supporting venture investments in early rounds in startups that are coming out of labs and universities, and obviously sort of circling around, hoping for opportunities for big licensing deals or acquisitions. And then, of course, green tech, carbon recapture, and battery energy storage, particularly batteries, are hot right now. And finally, I will say that I think cryptocurrency while getting a lot of media play, I think it's pretty much limited to the big boys. There's a hesitation for smaller firms to get deep into that just because of the expertise that's really needed to play in that area. I can go on, but I'm sensitive to, I was going to talk somewhat about changes in legal documentation, but I can defer and let somebody else go and circle back around if there's interest in that. But I think I've hit my 5 minutes.
That's great. Let's keep going and see if we have a little extra time for more discussion, but we want to hit a few more jurisdictions. So maybe Raphael, you're going to speak about China.
Hi, thanks. This is Raphael from Zhongren Law Firm. First of all, this is my first time to join this seminar, and it's my great honor to have this chance to share my knowledge in the PRC markets with you. I'm a partner from PE department from Zhongren Law Firm Shanghai office, and I'm mainly focused on PE and VC and cross-border MA, as well as US and Hong Kong IPOs. So I would be glad to share my experience in the last years of the PRC VC market. So as we all know, the travel restrictions and the general uncertainties caused by the COVID-19 outbreak do have had a significant impact on venture capital globally, including China. But fortunately, due to the outstanding organization and control in China, we were seeing that the process for VC transaction in China was refreshed and increased a lot. Here is a series statistics from a famous VC media that I would like to share with you. In 2021, the volume of all VC from angel or seed round to ABC round is about 2,400. Compared with 2020, the number is only 1,300. So you can see the number is near double. And also the number is also bigger than 2019, which is around 1,900. So accordingly, the volume as well as the aggregate deal amount during that period is significantly increased in China. And also, as you also mentioned, due to the policies against the negative impact caused by COVID-19, we are facing the era of abundant liquidity for the recent years. So also due to the situation stabilized and the travel restrictions were loosened in China, the VC investment have been back to the normal track. And they even reviewed much more quickly to make up for lost time. So this is quite obvious in the January and the February in China in 2022. However, for March, currently we are facing a new round of COVID-19 now, pressure, and the speed has been a little slowed down. So that's the high level overview of the state of VC market in China. Thank you.
That's great, thanks very much. Keeping it moving along, we're going to go to Singapore and Kyle from Wong Partnership. Is Kyle on? Don't see him. So why don't we skip to Fernando from Brazil?
Great, sounds good. Thank you. So consistent to what Chris and Raphael mentioned, 2021 was also a very remarkable year for our venture capital ecosystem down in Brazil. In general, the volume of investments grew, the valuations and the checks got bigger. And we tried to pull up a few interesting information from various sources to give some more light to the state of the ecosystem here in the previous year, for the first quarter of 2022. So for 2021, we've had around 760 funding rounds in Brazil, involving around $10 billion in investments, which corresponds to almost a 200% increase compared to 2020. Sorry. The average round size also increased based on the data we researched and consistent to our own practice. A rise of approximately 150% vis-a-vis 2020. And for the first quarter of 2022, we've also seen deals in the same level of, let's say, volume and checks. We've had approximately 170 funding rounds so far in this year, and the checks remain consistent to the average size that we saw last year. As you know, our ecosystem is still relatively young, and this is apparent when we look at the stage of the investments. And I have here numbers here that show that out of the 760 rounds that I mentioned that we had last year, 217 were seed rounds, raising around $150 million, which is approximately 2% of the total volume of that year. And then we have Series A rounds that correspond to 83 of those rounds, almost involving an amount of $1 billion. So, for Series C and further down the road series of investments, we've only had 25 investment rounds, which is not many, but has been increasing year after year. We've had a majority of them involving fintechs and techs in general. As Chris said, tech and software were also king here. So we've had, of course, many of the deals involving fintechs, retail techs, log techs. We've had a good consolidation in terms of log techs in Brazil as well. Many of the logistics companies also, by means of their corporate venture capital programs, also entering in the market and making acquisitions. And net techs, also consistent with what Chris mentioned, were very relevant here. Many of our education system in general is very private, let's say. And as a result, there was a very early in the pandemic, very early move towards digitalizing many of the platforms of those early education private schools. So I would say that those 3 or 5 industries, corresponded to much of what we saw last year: fintechs, retail techs, log techs, ed techs, and of course health techs. And I would include with that also insure techs, consistent also to what Chris said. We've had a few regulatory innovations in Brazil that finally have allowed insurance companies to provide services in a more, let's say, digitalized manner with less regulation over them. And that has been very welcomed by the industry. And we expect that to be something that we'll continue to see this year. We've also had a few new unicorns to the club in Brazil. Approximately 10 more companies, local companies in Brazil, have had valuations of more than $1 billion in the last year in their latest funding rounds. From the investors' perspective, we continue to see much of the funding coming from funds abroad, including SoftBank and the likes. We also have a strong group of local funds in Brazil, and that continues to grow. But still, foreign funds compose much of the investments in the local market. Brazil is a huge country, of course, and as Chris said, we have pretty much São Paulo, which would be in your parallel California, I would say, Chris, and the rest of the country. And that is clear when we see the number of transactions by region. So the southeast of Brazil continue to correspond to the vast majority of the VC fundings that we saw last year, and still first quarter of this year. So I think my 5 minutes are over, but happy to talk about developments to the regulatory framework as well, and a few legal innovations that we've had the last year or so.
Great, thank you. We'll keep moving through to Chris Letters from the UK, from Gowlings in the UK, talk about their market.
Thanks, Alan. Thanks, guys. So in terms of sort of general overview of the market, I think you're probably all aware that UK is a sort of very well established market for investment, and particularly for foreign direct investment. So that's meant that really in the last couple of years we've been very well positioned to deal with COVID-19 and all the other things that have gone on, which might otherwise have not been expected. The public market remains volatile, and that volatility has actually pushed a lot of the money into the private markets. So we've seen a number of market debuts either being paused or abandoned, and things instead going to private funds. So the private market has been very, very busy the last couple of years. And we see that in a number of places, but even in the recruitment of talent and the retention of talent, US firms have moved in and continue to move into London and inflate salaries, which is good for some of us, but not good for those that stay in Birmingham with Gowlings. But that's all good. We haven't really seen any impact yet, just from the energy crisis or sort of the impact of inflation, or indeed the war in Ukraine just yet. So in our own practice, we've seen a number of processes be paused or on go slow the last couple of weeks, but the majority of those are actually continuing, and corporate finance advisors aren't expecting any material impact on valuations from what's going on elsewhere in Europe. There's still an enormous amount of dry powder in the market that needs to be deployed, and that's meant really that private capital has had a real advantage in the last couple of years in any processes where a trade sale or trade investment might otherwise have been an option. In terms of hot sectors, it's effectively repeating what everyone else has said, and anything to do with tech continues to be hot, in particular clean tech, anything which has an ESG angle. I don't know about the situation in other jurisdictions, but here there's a real focus on ESG being environmental, social and governance points, particularly with funds being under pressure to invest in and then report on investments with an ESG angle. Otherwise, businesses that have access to artificial intelligence continues to be a focus, especially those where there's a clear practical application for that. Every year we hear that it's going to be the year for AI, but I think this year in particular we are starting to see things come through where there is actually serious and proper AI which has practical applications. Otherwise, outside of tech, renewables continues to be popular. Perhaps more interestingly, wealth and asset management. So we've seen, I think last year there was a 265% increase in M&A and investment in the wealth and asset management sector, which wasn't necessarily expected beforehand. Key developments, there's two that I'd touch on. The first one is the National Security and Investment Act, which came into force earlier this year. So this is a new and more extensive national security regime in the UK, which effectively means that the UK government can call in for review transactions involving I think there's 17 different sectors. And so this is M&A as you'd expect, but also minority investments, I think 25% of the threshold. So even where you've got sort of minority investment in a company which is involved in transport, for example, there's just a load more stuff to think about and an analysis to be done up front to make sure that you're not within the scope of the regime. Failure to comply with that can result in heavy sanctions, and so that's turnover-based fines, criminal liability, as well as the risk that transactions which have been completed without consent are actually void. So we yet to see that play out in reality, and I think the feeling within the market is that will be reserved for Armageddon type situations, but it's a concern and it's keeping advisors busy at least. Importantly for this group, that isn't just for UK entities, so overseas entities which carry on activities in the UK by branch or regional office, some other activity, or else entities which are involved in supplying goods or services to people in the UK are technically within the scope of this legislation. So it's just something to think about when you are looking at things for clients, that is it something that might be within scope? Is it something that needs to get UK advice? The final point I just touch on before the end of my 5 minutes is Brexit. So it'd be remiss of me not to mention that. It's obviously been going on for a few years. I think the point here though is that we are feeling the impact of Brexit on the economy, but it's not really in the sort of short-term shocks that were previously expected. So there's been a lot of headlines in the last couple of years around sort of lorries queued up at the docks, waiting to get goods into Ireland or into France. But in actual fact, I think it's more about the sort of long-term impact on growth. And so the economy is growing, outlook is good, but I think there's a feeling among those of us who supported the Remain campaign, at least, that we'd be better off if we'd stayed within the EU. And that's it for now.
Great, thank you. And Kyle Lee has joined us from Wong Partnership. So the final stop, Singapore. Kyle, take it away.
Thanks, everyone. Apologies, my calendar didn't update for the daylight saving adjustments. Anyway, just to touch quickly on Singapore and more generally Southeast Asia, we've seen deals progress at pretty much a phenomenal rate last year. It was pretty much non-stop from beginning of the year to Christmas. Slight dip between Christmas and January when Chinese New Year took place. But since then, it's pretty much continued where it's left off. Deal terms have largely stayed constant. I think the focus at this stage seems to be speed for everyone, just given where the markets are headed. And I'll touch on that a bit later in terms of what a few potential speed bumps we're seeing. Maybe just first on sector trends, similar to what I've generally heard on the group, tech remains popular. Food tech in particular for Southeast Asia was quite a big hit. We saw an investment round for Series A in the alternative meat sector, which was the largest globally as far as I understand. And generally speaking, e-commerce, fintech, medtech all remain popular. There is a bit more of an ESG slant now, which seems to reflect the trend more generally as well. We also started an ESG practice recently to address the specific concerns here. And another point that came up recently is, at least this year, has also started to see a lot more inquiries into the crypto space. Not so much VC investments into crypto companies, but even the token issuances, etc., seem to have started to revitalize as well. So that's something that investors are starting to focus in this sector, which I thought was somewhat interesting given where we were a few years ago. In terms of the funds themselves, we've seen quite a few announcements on Southeast Asia funds raising their follow-on funds, or people starting to look towards this market more generally. So plenty of dry powder to deploy, but a few potential speed bumps ahead that I thought would be interesting to just touch upon. First is market reaction to Southeast Asia stocks. So for you who have been following this sector, you'd have seen that Grab completed its de-SPAC with Ultimate Growth late last year. So valuation for that was 40 billion. And that's currently seen as the Southeast Asia darling. Unfortunately, given it's a barometer for how markets react to Southeast Asia tech, the fact that it's currently trading at a valuation of around 13 billion, or about 70% down from where it started, is not a good sign. And for those investors who have the ability to switch jurisdictions, that may be something that gives rise to concern and question of whether there's a better area in terms of focus as well. Continuing on that trend, specifically on the line of SPACs, I think there's also been increased skepticism on the usage of SPACs as an exit option. Personally, I've heard quite a few clients calling off contemplated SPAC mergers. As mentioned, Grab isn't doing very well. And also, I think there's also an increased focus on the shareholder base which SPACs bring. There was some chatter recently on potential class action litigation, again for Grab. And that's really a reflection of the SPAC shareholder base, so to speak, that above and beyond the fact that it's US listed. So there is a question of whether that's really the better kind of exit option. So that's something that I think people are focused on. We haven't really seen much SPAC activity starting up this year. It seems to be mainly wrapping up what had previously been agreed upon in the past year or so. Obviously, there's also the market conditions, the interest rate hike, the war, etc. And we did see some of these SPACs that were called off specifically cite this. So there was a 2.5 billion merger, SPAC merger by one of the Indonesia credit platforms, FinExcel, which was specifically called off because really of the market conditions. Also question of whether you all are seeing your investor side clients also similarly face not so much a turning off of the tap, but really a closer eye on the water bill, so to speak. We've seen investment committees say that perhaps this is not the best time to be aggressive, and really it's a wait and see how things take out a bit more. So not so much. We haven't really seen it hit the deal flow. Obviously, we are a few months behind the deal making, but we have seen some valuation adjustments in terms of the term sheets, as well as the deals that are currently ongoing, as well as some deal term sheets being reconsidered or at least being paused for now. We have also seen some of the PE investors start to flow back up to their traditional areas of investment as compared to the recent years where we see them being in more active stance in the VC growth space. So that's something that will be worth watching. And on the startup end, quite a few are also adopting a wait and see approach for those at the later stage of their development before taking the plunge as to whether or not they want to go on to listing. So It just seems like more generally people are trying to tighten up and finish what they have started. But otherwise, the slant seems to be maybe we could just hunker down for a while.
Great, thank you. Thank you, everyone. I think that's helpful for all of us to get some insight. I know there's a lot of overlap between the jurisdictions, but it's comforting for the rest of us to hear what's happening and get a gauge on how it relates to our markets as well. So we're going to spend the next 10 minutes. It caught our eye that Sarainen has developed a new legal platform for startups in Lithuania and the Baltics. And Mathis has been kind enough to join us to spend about 10 minutes telling us what they're doing. I know other firms have tried similar things, but it'd be interesting to get an experience of one that's just started and been introduced. So Mathis, over to you, and interested to hear the story of what you're doing.
Thanks, Alan. Let me share my screen. It's going to be easier for me to show what we're doing here in the Baltic market. Can you see it all right?
Yes.
All right. So before I jump into the model legal documents that we prepared, I thought it would be a good idea to also introduce you really quick on the Baltic startup market. As of course, it's still under the development stage. But the pipeline is strong and the growth is strong. So we are really looking forward to see more and more deals coming and happening in the Baltics. This is the combined value of the startups in 3 Baltic states on the left, and the funds raised since 2012 in 3 Baltic states. So of course we are nothing new in the Baltics. 2021 was a record year, and we hope to maintain those levels in the upcoming years, even though of course this year started with a big challenge in the region. And those are the numbers from Lithuania. The combined market value of startups is a bit lower, because actually Estonia is the front runner when it comes to startups in the Baltics. We have already 10 unicorns, if I'm not mistaken, in Estonia, and 1 in Latvia, 1 in Lithuania. But those numbers should become more and more similar when the time goes, because the pipeline is strong in all 3 Baltic states. And actually, even though the market is still developing, we are already looking decent when it comes to the market of Central and Eastern Europe. Estonia is leading the way, even though it's a country of only 1 billion people. And Lithuania is also somewhere in the middle. And the other offices that we have in Latvia and Belarus, they still have some catch up to do, but yeah, we're probably gonna see them higher and higher in the statistics. Well, I'm not sure about the Belarus actually, because the trend is nowadays that the startup offices from Belarus are moving to exactly the Baltic states and Poland, of course, because of the challenges, geopolitical challenges that they face. And Sarainen was, we are proud to say that we represent most of the deals, in the market that we have. But since the market is still very much under the development, and I was, asked by Alan and the colleagues to present one of our initiatives that we launched just last year. Since there are many very early stage startups in the market, and to buy legal services from us, during the first month or even years is not an option. So actually 9 law firms in the Baltics combined their forces, and they prepared those legal documents that you see right now. There's 11 of them, to give them for free, of good quality for the starting startups to use, and already increase their legal compliance, as of day 1, and which we hope will help them to raise funds, in the future. So there were nine law firms participating. It was led by the Venture Capital Association in Lithuania that we have, and that actually happened a year or 2 ago in Estonia. Lithuania was the second to follow this initiative, and the Latvians, I think they are gonna do the same very shortly, because now the trends are very much following one another in 3 Baltic states. And yeah, so this, we'll see how useful this will be. Of course, our main goal is to help the new companies to raise their compliance. But the second goal, I guess, is to harmonize the market, because if most of the startups will use documents like this, we hope it will help them to negotiate and enter those funding rounds quicker, because the venture capital and angels will already be familiar with the documents as well, and it should save some time for negotiations. So yeah, this is what we did. And I also thought it would be a good idea to share another initiative that has already launched in Estonia and Latvia, and in Lithuania actually the last one. So that's a big issue for me. I have to, as working in Lithuania, I have to follow suit. The colleagues in Tallinn and in Riga, they already launched the free legal clinics. So they dedicate 1 day in 2 months approximately. They collect the applications from the startups. So they ask for the startups to already write down what kind of issues, at least preliminary, what kind of issues are they going to face or are they facing right now. This helps the teams to select the professionals that should join the course with the startup, and with the startups, for about 1 hour, they get the free consultation from the professionals, working at Rhinen in Riga and Tallinn. And as for the Vilnius, we're hoping to launch this also in May and June. So this, we are not sure if this is going to attract a lot of startups, because of course those that are going to participate, that are going to apply, they are very, very early stages, and they're probably not gonna purchase our services immediately, but we'll see what happens after 2 or 3 years. So that can be a business opportunity for us. But more than that, it's our genuine wish to help the startup sector grow, as we really see the potential, and we want to participate and do our little pro bono work to help the sector develop. Yeah, so those are 2 cents for me.
That's fantastic. Thanks for sharing that with us. I'll open it up. Does anybody have questions for Matas about the program or anything you want to share before we jump into our last topic? That's great. I know a number of firms, including ours, do work with startups in different ways, whether it's some clinics, et cetera. But I find anyway, particularly gratifying when you're working with these people, because in terms of, the reward you get, just our ability to help them is always incredibly satisfying. And they're always so appreciative. So kudos to you guys and the collaboration that you guys are having with other firms to make that happen. I saw a question, Chris.
Yeah, Matas, I'm curious. I think it's amazing that you were able to gather 9 law firms to collaborate. I don't think we could do that in the United States. And I'm just curious how will you work collaboratively to update the documents as necessary? Is there kind of an organizational structure process already in place?
So thank you for the question, Chris. No, because we launched the documents only, last year, but it was like autumn last year. So we are pretty confident that they are up to date right now. And when the time comes to update it, it's going to be a new challenge. I hope we can cope with the challenge, but yeah, I'm still not sure what kind of the process will we have. Hopefully the Venture Capital Association will assist us, because they're kind of a unifying force, and everybody wants to be in a good contact with them. So I guess it's a good contact, to lead this process. And of course, the Baltic market is much smaller, so we have we know, and we've seen most of our colleagues working in other law offices, because only the big law offices participated, so we know them, the people, and it's easier to get in contact. And because we all share the sense of of hope that this sector will grow and will give a big impact in all economy that we have. So yeah, this I guess helps us to combine forces as well.
That's great. Congratulations.
Any other questions before we move on to our last topic? Okay, so we're doing well on the agenda. The last topic we have is foreign direct investment restrictions that may be on the rise. And I'm going to turn it over to one of our co-chairs, Jens, who's going to take us through a discussion on that and open it up to the floor for all of us to participate. So Jens, over to you.
Thank you, Alan, for the introduction. For those who are new in the group, for my introduction, my name is Jens Wolf. I'm a co-chair of the World Law Group Venture Capital Group, and I'm head of the Venture Capital Practice Group of Taylor Wessing. We thought in preparation of this meeting today that we should discuss foreign direct investment restrictions, because what we see is that in light of the war in Eastern Europe and of the increasing tensions in world economy, that there is not really an indication that the very tough scrutiny of foreign investments, which we saw over the last years, would be relaxed. It's more the opposite. So the fierce war and tensions in terms of international trade it even seems more unpredictable what transactions will raise concerns by the governments and which transactions could require remedies or might even be blocked, because this is not only protection of national economy, but also a political instrument. So let me shed a light on the situation in Germany. So Germany's direct foreign investment rules have been frequently amended over recent years, and from January 1st of this year, Germany renewed again the FDI rules and expanded the definition of the so-called critical infrastructure. So in our national law, we now have a list which was 11 relevant areas, and it's now 27 relevant areas where the German Ministry of Economics can stop a transaction for scrutiny and further review if an investor or purchaser from outside EU or EFTA countries would acquire more than 10% of the voting rights. So this is something which really affects our venture capital area, because normally we expect these FDI restrictions only in 100% or majority purchases, but here it's already triggered if more than 10% of the voting rights are affected. So the critical infrastructure definition is quite broad, and it encompasses energy, water, food, IT, telecommunication, health, finance, insurance, transport, traffic, not to say military and security, as it's of certain interest now during that time. And the question is how the tensions we see worldwide would have an impact on the FDI restrictions. So Europe is a bit of front runner over the last years. Beforehand, it was the US with the CFIUS rules under the Trump administration. And this was the reason why we wanted to discuss this today, to just open the floor to have a better picture what's happening in your jurisdictions. And then as a second question, what we as a group should do to make these restrictions transparent for the benefit of our clients, maybe to have a publication of World Law Group, which is available, and that gives us first-hand insight if a client asks us if there are any restrictions from the administration of a foreign country when doing an investment. So this as an introduction, comments and your insight, what's happening in your jurisdiction. Who wants to start?
can just add real quick because I have worked with a few applications when it comes to FDI, still trying to figure it out how exactly it is applied because the law is super broad. Sometimes, for example, if the investor from wherever actually it can be from NATO, it can be from EU, decides to acquire a small software company in Lithuania, it can be 10 employees and less than 1 million in revenue, you would still have to apply for the FDI clearance because you fall under the regulation, which is surprising to me that we do not the law doesn't try to figure out which companies are actually really important national security and which ones are like a small ones and they shouldn't be under the radar for this law. So it's super broad, when it comes to the regulation, but the enforcement of this law isn't that strict because actually we haven't found there was no application that would be rejected or where they would ask for us to provide more documents, more information. It's super easy to get an application to get this clearance, but the law is very broad and it covers the most of the sectors, and in these sectors all the companies, no matter how big or small they are. So that's surprising to me.
Thank you for this. So and anyone else, maybe Chris, any update on CFIUS rules in the States?
Congress continues to look at CFIUS and try to determine how active they want Congress, the committee, basically to become. It continues to be a topic of discussion. I think, frankly, the issue is going to be directed to a handful of countries that raise, where the relationships are most tenuous, and of course the subject matter of the technology, and those transactions will become heavily scrutinized. I think that's inevitable at this point. I don't think it will be. I think there are some technologies at issue where it almost doesn't matter what country it is, the investors will be scrutinized. There are other broader scale of technologies where the countries of the investors will be heavily scrutinized, and we don't have a lot of guidance yet as to how the committee is actually making its determinations, but we are concerned about it when we're talking about cross-border venture investments. And I have a partner who's really sort of dedicated to CFIUS, and so when the question comes up, the need is to identify the technology and identify the country of the investor. And then he provides us with an analysis that tries to identify the risk. But I think realistically, I think we're going to live with it for a while. I don't see it getting any more flexible or loose. And I think it's something that it's a box that everybody needs to check if they're investing in the US.
Thank you, Chris. And anyone else?
I'm happy to share a little bit about Israel. I'm Michal Herzl. I'm a partner in the corporate department of Herzog, Fox & Naaman in Israel. So I think maybe a little bit different from the US. Israel, as you know, has very, very strong diplomatic relations with the US. So we tend to be a little bit influenced by US, the US approach. Not that we will necessarily follow the US approach because it won't work for our economy. I mean, being the startup nation, we need foreign direct investment desperately. The money has to come from outside of Israel, essentially. But but the U.S. has been known to put pressure on the Israeli government to institute foreign FDI controls along the vein in the same vein as what the U.S. is doing. But that being said, there were in past years there were pressures to put it, with respect to certain countries, and we didn't. We resisted. We also don't have the same level of or really any FDI or sanctions against Russian entities and individuals for similar reasons, for strategic reasons that are unique to Israel. But we did have about a little over 2 years ago, the government set up a new FDI committee that's intended to, it's not like CFIUS, it doesn't have direct control over the decision whether to allow certain transactions, but rather its role is to guide regulators that do have to make decisions with respect to a transaction. So for example, a key one would be the Ministry of Defense. If there's a company that operates in the defense space, it will have certain licenses from the Ministry of Defense. And then in order to keep those licenses, it will need to get a consent for a change of control. So in that instance, the Ministry of Defense can be advised by the commission, this new commission that's been set up. And again, the commission doesn't make the ultimate decision, but if they say, this business is critical to the security needs of Israel, we can't allow it to be owned by a non-Israeli acquirer, then the Ministry of Defense is definitely going to take that into account. And I think, like Chris was saying, for the U.S., the key concerns here are the jurisdiction of the buyer, whether it's where the company is incorporated or the ultimate beneficial owners. And obviously, Israel has its own concerns when it comes to jurisdictions, principally the ones that don't have diplomatic relations with Israel. And then, of course, also the type of the industry in which the target operates. So Israel has its own very, very critical security needs, and so security is going to be a main target for FDI controls.
Thank you. One question in this regard, in terms of Russian investment, which was very important for Israel over the last years. Is there a current discussion to have sanctions over these investments, or what's the discussion lines at the moment?
Yeah, I mean, there are discussions, but nothing's been instituted. But it's sort of a check back every hour, and let's see what the particulars of your specific transaction are. But anyone who has, we had we also need to make sure a lot of our companies have U.S. involvement, U.S. investors, U.S. potential buyers. So we need to be looking at FDI with respect to Russia even more broadly than just what is the Israeli government doing. But yeah, there are discussions. But as you understand, Israel has a unique relationship with Russia and can't necessarily do what the U.S. and the U.K. might be willing to do.
Yeah, sure. And anyone else?
Yeah, thanks, Jens. I might just build on what I spoke about earlier on. So as I said, this is one of the big changes in the last year. Has been the introduction of this new National Security and Investment Act, but importantly, it isn't being badged and it isn't an FDI control per se. So it really calls into question all transactions where there's either an acquisition or you build above 25% voting power, or 50% or 75%, and it affects UK buyers as much as it affects anyone else. That said, the Secretary of State has been they've stayed quiet on exactly what it is that they will be looking at when they look at these transactions. So they are really just looking at an undefined risk to national security. I think the way that we're seeing it in our practice is really, as other commenters have said, that if it's an asset which is moving offshore or going to ownership of another state, then that's more likely to be an issue than something coming onshore. So we acted on a transaction just around Christmas where we were acting for a US buyer of a defense business which was owned by Israelis. And although we had to do the analysis, it was felt, well, that's not going to be any greater risk to UK national security, so it's not going to be an issue. Whereas if it was a Chinese buyer, that might be something that causes more concern. And then, as Matt said, it's the same for us, really. There's no threshold of materiality. It's deliberately cast wide, and it's really just up to the Secretary of State to decide exactly what he's going to do in each instance. we'll see how that plays out in the next 12 months, I think. But yeah.
Thank you so much for this. So as a consequence of this very brief discussion here, I think we really should try to sum up some of the regulation in the respective jurisdictions, not as a broader publication like the venture capital guide we issued last year or the year before last year, but more or less as a first-hand advice, maybe 10 or 20 lines per jurisdiction. We will discuss this between the co-chairs, and then we'll come along with a proposal of how we do it. As we've seen today, that there are so different approaches to this area of regulation, so that it would be helpful to have this at hand if the question comes along. So thank you very much for this discussion and these insights into this subject. We have
Jens, could I just interject one other trend? The anti-money laundering regulations in the U.S. are becoming, I don't think we're quite up to the Eurozone in terms of, how strict they are, but I think we're headed in that direction. And I think that will have another impact on cross-border investing down the road. Just an observation.
Yeah, absolutely, that's true. We are all suffering from this. Also, we as law firms, each client intake is a mess now in terms of anti-money laundering review, and clients sometimes have no real understanding for this. So yeah, we have just one minute to go. So let me ask you if there is any other business. Nothing here. So Hannah, anything from you?
I think we're good on the WLG end.
All right. So thank you for participating, Hannah. Thank you for organizing all this again, and we will follow up by email and typical ways of communication. So thank you for participating. We had 17 participants here, so it shows us that this group is an active group, and this is very helpful. And let's continue and take it from here.